To win at life, you need a wicked portfolio. Global, diversified, and with one eye on the future. Being invested in the sectors that will break through in the coming years will set your portfolio apart from those who blindly stuck to the winners of the past.
In our World Portfolio series, we've covered how to build a sweet, low-cost global portfolio and shown how to weight that portfolio by geography and sector.
We think people get why it's important to own the world geographically, why the markets of the developing world should play a big part alongside the powerhouses of America and the Western economies.
Pinning down the sectors of the future is a different story, a story that we're telling today. Let's check it out.
Welcome to MoneyUnshackled.com, the investing channel and website that says you and your finance is free. This is Andy, I'm Ben, and if you like what we say, hit the like button, click subscribe.
This episode is the fourth in a series on the Money Unshackled World Portfolio, which we've built on the zero trading fee platform, Freetrade.
If you want to emulate the World Portfolio, then sign up to Freetrade with our link. By doing so, you'll get a free stock worth up to £200. You'll find the offer along with many more on our website, MoneyUnshackled.com. We'll put a link in the description below. Let's get into the video. When you can second guess sectors. There are times when high-performing sectors and subsectors cannot be easily identified in advance. There are going to be movements in society and in technological advances in the decades to come that we simply can't predict now. Take the internet for example. This did not exist in a publicly available form until the mid-90s, and then suddenly it did.
All manner of advances in technology, banking, consumer entertainment and so on have come from this game-changing moment. Investors in the 70s picking the winners of the future could never have predicted how wide-ranging the internet would be.
But there are some basic human truths that we can use to predict the performance of several key specific sectors with great confidence, which we'll get to shortly.
ETFs negate the need for stock picking future winners. We invest in the stock market via ETFs, exchange traded funds, which are collections of shares on an index that have something in common, whether geographical, by size or by sector.
ETFs are beautiful things because they are typically dirt cheap to own. Their ongoing fees are low compared to managed funds. And because an ETF almost certainly cannot fail in the way that a share can.
Let's say for example we think the oil company Royal Dutch Shell will do great over the next 10 years. We could buy shares in Royal Dutch Shell and it could do great.
It could also run into trouble from bad financing, environmental scandal, or technological advances that mean it goes completely belly up, losing us everything.
Instead, we could buy an oil ETF which would track multiple oil companies or track an oil price index. When one company on the index fails, another will take its place, meaning the investor's cash in theory is protected by diversification.
If the objective were exposure to oil, then an investment in an oil ETF would be a superior one to an investment in Royal Dutch Shell, in our opinion.
Basic human truths. People are always going to age, always going to need to heat their homes in the winter, always going to need to connect to others, always going to need to feed themselves, always going to need to find more efficient ways to make profits.
Knowing that humans in 20 to 30 years time are basically the same animal as humans around today means that we can make some solid assumptions about the direction of a global economy in the years to come. And at least 3 crucial sectors of the future become obvious.
Future sector number 1, energy. You're going to want some energy exposure in your portfolio. Unless you've been living in a box, the news has featured little else recently other than the end of the world predictions due to climate change.
Whether you're a believer or a skeptic, money talks. And the captains of industry are now mostly on board with the idea that energy production needs to change. World governments have even set a target of 2050 for it all to happen by. You can bet that the story of the next couple of decades will be about energy.
FTSE 250 company Drax Power Station in the north of England provides 20% of the nation's renewable electricity and has been transforming itself from dirty coal to clean biomass, and is now heavily investing in research into carbon capture and looking into building a hydrogen cluster economy in the Humber region of the north. It is this type of innovation that will define the energy sector in the next decade.
With tighter and tighter regulations on CO2 emissions into the atmosphere increasingly likely in the coming years, companies like Drax must adapt or die, and it seems they are choosing the former. Either way, the energy sector is at the start of a process of innovation and change that investors will want to be a part of.
Energy in the money Unshackled world portfolio. The energy sector has a small but important presence in our money Unshackled world portfolio at around 5% of the total portfolio. This predominantly comes from the mighty energy companies domiciled in the US, UK and Europe, and crucially includes smaller companies from the FTSE 250 and S&P Small Cap 600 indexes, companies with the best potential for growth.
This is a sector that we think has just enough coverage for now, given there is still uncertainty about the pace at which new energy technologies can be implemented and the risks of running out of natural gas and oil. We see energy as a higher risk, higher potential reward sector that we are happy to keep at 5% of the portfolio for now and tweak over the years.
Future sector number 2, technology, robotics and automation. If there are two things that humans can be relied upon, it is their averseness to having to work and also the desire to turn a profit. Robotics is a new subsector that has come on leaps and bounds in the last decade, which combines both of these things.
Human civilization has consistently sought ways to increase productivity and improve output while having to work less. On a personal level, people don't want to have to toil the field and work the mine, and the companies that employ them to do it don't want to have to pay for their labour force when a machine can do it for free.
And yet, robotics is still in its infancy. The likes of Waymo, Google's driverless car subsidiary, are years away from full implementation, and the global workforce as a whole looks set to still be needed for the foreseeable future.
But robotics and automation technology is on its way. Many startups on the S&P Small Cap 600 index are pumping out innovations only to get bought up by the big tech giants and incorporated into smartphones, cars and medical machinery, making everyone involved a lot of money.
Robotics and tech in the money Unshackled world portfolio. Technology as a whole sector makes up around 20% of the portfolio, of which the subsector of robotics makes up a quarter. The technology sector as a whole is crucial to a portfolio. What is the human race without technology? Robotics needs to be there so we can ride that wave of future tech to its natural conclusion, a big ass retirement pot for us investors. We added a satellite ETF called the iShares Automation and Robotics ETF to ensure our tech sector was tilted towards the future, and holdings in the iShares S&P Small Cap 600 ETF in the portfolio contain a decent chunk of tech innovation companies also.
Future sector number 3, healthcare. If we're honest, healthcare is the sector that excites us the most for growth potential, and we've gone out of our way when balancing the portfolio to ensure that healthcare was adequately represented. People are getting older and people are getting richer. If you don't feel like you're getting richer, that's because we're not just talking about those of us lucky enough to be born in the West.
This is a global portfolio, and while lefty Guardian journalists are moaning on about spiralling poverty in the UK, the countries that really have problems are getting richer, older and more democratic, and with that last one comes a greater outcry for medical advances.
A poorer country like Ethiopia might have bigger worries right now than the price of penicillin, but as the African nations and other emerging markets become richer, or at least in the near term as poverty declines, there will surely be a growing market for medical drugs along with more money in which to pay for it.
Turning our eyes back to the UK and similar developed countries, we are not without our own medical problems. The NHS is bursting at the seams as people live well into their 80s and 90s, and as people flock one way across the border from poorer nations seeking a better life.
Solutions will need to be found to care for all of these people whose older age will now span from 60 to 100 or more, whereas before it only lasted a handful of years. Older voters will mean issues like diabetes and Alzheimer's will become more of a political hot topic than ever before. And it's not like people are giving up eating unhealthily anytime soon.
Healthcare in the money Unshackled world portfolio. Healthcare had about a 10% presence in the portfolio, mostly due to the pharmaceutical giants in the US and Europe finding pride of place in our core ETFs. But we thought healthcare warranted better than that.
So we added another satellite fund, the iShares S&P 500 Healthcare Sector ETF, to the portfolio. This gave us a lever to pull to increase the weighting of healthcare in the portfolio. We used this to bump healthcare up by a further 3% to 13% overall, and haven't looked back.
Conclusion: own the world, own the future. This World Portfolio series aims to teach you how to build an example portfolio and how to do so whilst holding an appropriately weighted spread of geographies, sectors and commodities. We hope from this episode that we've got across the importance of owning the future too.
This portfolio was built on the free trade platform and is my genuine portfolio. Don't forget that if you want to emulate it or want like it, you can get yourself a free share when you open a new free trade account through the link on the offers page of moneyunshackled.com. We've put a link to the page in the description below. Question of the day: what sectors do you think that we've missed? What would you add into the world portfolio? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.